Investing can be daunting in the beginning. I'm a perfect example. It took me well over 10 years to really start to invest. Today, I'm going to break down what I think are the big questions beginning investors ask and what holds them up. Hey, Frank Thomas here from Wealth Generation Strategies, and today I'm going to try to give you what I think is the beginner's guide to investing. And it's going to break down 5 big questions plus a bonus question at the very end that I think hold back potential investors. So let's get started. Number 1, how do I start investing? Now this sounds like an insane question, but this question has a deeper root. This is more of a what, when, where, how, when looking at investing as a whole, and it's easy to get muddled in the beginning. So don't think this way. Starting is actually really simple. Just start by saving funds you will invest in the future, because investing requires you to build those saving muscles first. So think of it that way. If you're not sure about anything, just start saving and learn about investing. And that brings me to my next point. How much money do I need to start investing? At one time, if you wish to invest into the stock market, you'd have to save a minimum of about $1,000 just to open an account to start purchasing stocks. Well, times have changed and you can start investing on just $10 if you wish. I think this is more of a question of time and not amount. Take the time to better understand potential investments before starting. When you start saving, take the time to learn about what you think would be good for you. Well, before continuing, if you're enjoying this video, give it a like, and if you wish to see more videos on investing from me in the future, consider subscribing and click the notification bell. And this just makes sure you get notified the next time I drop a video on investing. Let's get to question number 3. What are the different types of investments? This is a tough one. Man, this is really tough because there's a ton and there's 10 times more crappy investments. The 3 legitimate investments in my mind are the real estate, the stock market, and investing into businesses. Investing into the stock market and investing into a business is slightly different. A good example of investing in the stock market is going and buying stocks like Coke or P&G or 3M or a REIT or something like that. Whereas investing into a business is looking at startups that you believe in and invest your time and resources into those businesses. Now, this is a little more risky. You have to have the belly for it. Personally, because I'm a developer, I can invest time into these potential startups. Sometimes I've done very well. There was one startup that I invested some time into and a little bit of capital, and I literally 10x that investment within 6 months to a year. So it can be very profitable, but you want to look at all the different investments and figure out what's good for you. Okay? Hopefully that answers that question. Number 4. So how do I discover what's good for me? See how this is leading one into the next? Again, another great question. This is an exercise on assessing your desired returns versus your acceptable risk tolerance. Now, risk tolerance is, can you sleep at night if you put this money into this investment? Simple as it gets. Fortunately, the more we learn about investment products, we lower our risk of loss. If you discover that you can't tolerate much risk, a great investment for you could be just paying off the mortgage to your home. Believe it or not, sounds like it's not an investment, but it is, because your home's going to gain value over time. I actually know somebody who's just like this, and they decided to pay off their home, and that's an acceptable way to invest because you're still going to get a return on your money in the long run. But if you accept more risk, also consider diversifying your risk across multiple investment vehicles. This could be multiple stocks or ETFs, exchange traded funds, as an example. The reason why this lower risk, even if you're investing into the same markets but from different brokerage houses, what'll happen is one might rise and the other one might fall simply because of how they manage that particular vehicle of investing. I do this quite a bit. I have investments with multiple brokerage houses in Canada that all invest into the S&P 500. Now, it sounds like I'm investing into the same market over and over, and I am, but I'm investing based upon their strategy of using the S&P 500. And I have seen days when one goes down and the other one goes up, and they basically balance themselves out. But over time, if you've purchased good stocks or good ETFs or good real estate, it will gain in value, and that's what you want. Question number 5. How should I invest, or should I invest into the next great tip? Hey, psst, you got to invest into Bitcoin. Hey, you got to invest into this particular property deal. You got to, oh my goodness gracious. Successful investing requires you to stay away from hype and focus on performance. Performance is judged by history, and it's really important to look at the history of a potential investment. And the most successful investors of all time have learned how to invest like a firefighter. A firefighter runs to the fire, not away from it. And most investors who are not really good investors are running away from fires and not to them. If the stock market is going down, this is an opportunity to invest, not sell. I remember just recently, Bitcoin it's still actually a rage in a lot of places, but I have people coming to me, oh, you got to buy Bitcoin, you got to buy Bitcoin, you got to buy Bitcoin. That to me is a selling signal, because it's like, if it's on everybody's lips, the price is probably way too high and it's time to sell. That's exactly what I did. I cashed out, and I took a $300 investment and cashed out over $10,000, and promptly watched about 2 months later, it dropped by 50%. And I was out, so I locked in my gain, which is awesome. But a lot of people who were running on the hype lost a lot of money. And I know a lot of people who have lost their shirts doing this. How do I know this? Because I've done it. I have invested into some sure investments. Sure, like, this is a sure investment. It's on property. I was actually in a property a co-op that a bunch of us bought these properties that we were going to turn farmland into residential homes, and it was a sure investment. We're going to make our money, and we're going to do so well that we're going to put a guarantee against this investment, and that guarantee was after 10 years, if they hadn't sold these properties, then they would then, and we get our initial investment back. So what can you lose? Well, let me tell you, I lost over half of that investment in the long run. We put over $30,000 into it, and I broke a bunch of rules. I didn't diversify. I didn't check out the company well enough. I was a junior investor. I made a lot of rookie mistakes, and I paid for that education in around $15,000 to $17,000 of educational money, so to speak, in losses. So one thing I learned then was a contract is only as valuable as the paper that it was used to be printed on. That's it. Pennies. Become educated and learn to become like a firefighter. Invest when the market is down, not when it's up. And it takes a belly to learn how to do this. So those are my big 5, but I do have a bonus for you. And the bonus is, how do taxes affect my investments? Wow, this is a really important question. How important? Well, it could make a difference of you saving 25 to 50% more in the long run on the same investments. My number one answer to this is to invest into government-sanctioned investment accounts. In Canada, we have what's called an RRSP, or Registered Retirement Savings Plan, or TFSA, a tax-free savings account. Now, these investment accounts are different, but they allow me to invest with pre-tax money, or when I take withdrawal, there's no taxes on the money. In the US, there's the 401k and the Roth IRA, which are pretty similar to the RRSP and the TFSA. If you're in the States, please look into a local person there and understand what that's all about. In the UK, I also know that there's something called an ISA, which is an individual savings account. Again, if you're in the UK, talk to somebody who's a financial manager and find out what is the best vehicles you can use to invest money. So there you have it. Those are the 5 big questions I believe that are part of what I would call the beginner's guide to investing. And I've got a lot more videos coming out, and I'm actually developing a playlist on those videos. You'll see right now that the video playlist is attached and you can see it on the screen. So if you want to get more questions answered when it comes to investing, be sure to click on that playlist. There's going to be a bunch of videos in there that will help you answer very specific questions about different investment vehicles, different investment schemes, you name it, I'm going to try to cover it. So thank you so much for joining me today. I hope you've enjoyed this video. If you have, give it a like I mentioned earlier. Otherwise, my name is Frank Thomas, and I hope to see you again. Bye-bye.